Every founder and CEO I talk to has the same exact problem. There's just not enough hours in the day, in the week, the month, or even the year, really. And too much of the time that we have goes to things that could and should be automated. Hi, I'm Travis McBurney. I founded McBurney Group, where we build custom AI solutions for your specific operations. We train your people how to use them and help you think clearly on where and how AI can help your business. The point just isn't just about saving time. It's also making sure your business can keep up with AI as AI changes, what competition even looks like.
Hi, Rolando.
Hi, how are you, Sai?
I'm
Thank you
doing
for
great. So,
inviting
how
me.
you're doing?
I'm doing great, and I'm really excited to be here and introduce myself to your audience. You know, when I received your invitation, I looked you up, of course, like all of your guests do, and I have the same thing to say about that initial impression that most of your guests say. I was really impressed by your content and by the work that you're doing on this podcast. And I'm really excited to use this forum to introduce myself. And I like the questions you ask, or I could tell you've done your homework, and I plan to do the same. I've done my homework also, and I'm ready for this conversation. Very excited to have this conversation with you. Thank you for inviting me.
It's an honor for me, Rolando. Thank you very much for being on my show. And I have gone through your profile. I can see you're doing great work. So, I thought to tell about your work to my audience. So, can you please introduce yourself to my audience?
Sure, sure. My name is Rolando Rivera. I am the founder and principal of fintechtrades.com, um, also known as Market Leader Game. And we have a product that we released just recently called American Market Analysis as a Service. My background is starting with the U.S. Army. I joined the Army in 1978, and that turned out to be a really good decision for a 19-year-old. It gave me the discipline that I needed to work on the things that I'm working on today. And it also gave me the foundational knowledge in technology to work on these things. So, for example, I worked on a scholarship selection program using COBOL. That gives you an indication of how long ago that was. I worked on a search engine for special forces operational research. I taught myself how to program in C for that project. I worked on uh, NATO projects. I worked on storage as a service projects. So after I got out of the military, I used that knowledge for those projects. So it gave me really disciplined approach to problem solving and developing solutions. So one of the things that I found really frustrating when I got out, when I retired in 2022, I started moving money around. I thought, well, I'm going to invest now and prepare for, long-term retirement, not doing much. And it really amazed me the approach that most people take in investing. Given my background where I do a lot of analysis and I look at every single variable and combine things to come up with a solution, I found that investing was kind of the opposite. People were putting good money down on just a story without really thorough analysis of what was behind that story. So, as an example, people look at, oh, SpaceX, right? Oh, that's great. Elon Musk is doing that. He's a visionary. Oh, they're going to put data centers in space. That's a wonderful line of business. And people actually put money into that level of analysis. And I just thought that was incomplete. The questions that I ask myself is, how do I know that SpaceX is the best investment I can make? How do I know that there's something else out there that's doing something similar, maybe more efficiently? They're just not getting attention. But without doing the research, I don't know. And it was frustrating to me to think that invest hard-earned money on something that I didn't thoroughly understand. So that's what started me on this road with American Market Analysis as a Service, doing more research on what companies are out there and what companies I should be looking at for potentially investing in. And that's why I am where I am now with this product. Usai, I'm not hearing you. Hmm.
Yeah, I wasn't
Oh,
mute.
there it
I
is.
wasn't mute.
Okay, now I can hear you. Okay, go
Sure.
ahead.
So yeah. So let's start with your story. What problem in financial markets frustrated you so much that you decided to build fintech trades?
Well, I touched on that in my previous answer, right? But it was frustrating that people look at a story first, invest money, and then they look for proof um, to support that opinion or that story. And I think that really investing should be in reverse. You should analyze what's out there that is potentially good for investing. And then once you come up with a short list for due diligence, then you look at the story behind the company. So I flipped that around because it was just frustrating to me to invest in something that I didn't thoroughly understand yet.
Great. And thousands of investors rely on news, social media, and emotions. How does your approach challenge that traditional way of investing?
Yeah, I mean, just the what I do is instead of looking at headlines, instead of looking at a news story or something that somebody tells me about, and then research the company after I get interested in the story, I flip that in reverse. I do analysis on all companies, not just a few. So I want my pool for comparison, right? I think this company might be good, and that's how for investing, and that's how most people do it. I want to do the analysis first. I want to look at the balance sheet, the income statements. I want to look at cost of revenue percentages. I want to look at profit margins, valuation. I want to do thorough analysis, come up with a short list, and then pick the companies from the short list that sort of fit my preferences for investing. So I flip that around. I don't do emotion. And then by the same token, I don't when I buy, I plan on long term. I don't chase what the headlines indicate are winners, and I don't panic in periods of decline. I let the data help me make decisions on what I should buy and when I should sell.
Got it. And what makes AMAAS analytics fundamentally different from platforms like TradingView, Seeking Alpha, or other stock research tools?
Well, all those platforms that you mentioned, and most of the platforms out there that kind of look similar to what I do, are very good at presenting information. There's charts, there's other data about different companies in different formats. What's different about AMAAS, American Market Analysis as a Service, is that we do the AI interpretation of that data, and then we present it to the user. So we look at the data, we analyze it, calculate it, of course, to see whether or not those figures are good, and then we make a determination about whether or not this company makes due diligence based on the AI interpretation of that data. So we display the data like all the other platforms do, and then we also do AI interpretation and provide that to our users. So I feel like we go that step further. We leverage technology to give people more insight on why a company is worth investing in, and why a company is performing well, why they're not performing well, that sort of thing. Why that company ranks higher than others. All of that is in the AI explainability section of single company analysis in my platform.
Awesome. So artificial intelligence is everywhere today. So how do you separate real AI from marketing hype when it comes to financial analysis?
Yeah, I mean, you do. You see a lot of AI hype out there, right? And people like uh, claiming that they're using AI, and then when you look at the product, it's kind of not clear how they're leveraging the technology, but and they say they are. With my platform, AI doesn't invent the analysis. AI interprets that analysis. So the AI layer for the platform is um, interpretation and explanation of the data that we pull. So we don't invent, what's the formula for Black Scholes or what's the formula for, other formulas for predictive modeling. We use the standard models that are out there. We feed those models with the data we collect, and then the AI explains the results of that analysis and that modeling. So I think we take that AI one step further. Instead of just talking about we use AI, instead of using generative AI to write code and to collect that data, we use AI to interpret and explain the data.
Very clear. So,
Yeah.
uh, your platform analyzes thousands of publicly traded companies. What are the biggest technical challenges in processing that amount of financial data accurately?
That is a huge challenge, actually, and the thing about it, it's not just the amount of data; it's the fact that the different data elements in financial analysis have different uh, times that they're usable, expiration. They have different expiration. So, as an example, all of the balance sheet data, the profit margins, the things that we use for revenue cost analysis, the price earnings ratios, and things like that we use for valuation. All of those things update every quarter, 3 months. But there's also data elements that we use that update every day. For example, price movements, multiple times per day. Other things that we use like sentiment, news feeds, and natural language processing of sentiment. Those things change maybe multiple times a day. Things that may affect the confidence of the forecast that are sort of macroeconomic indicators. Those things have their own schedules and change at different periods. So you can't take a snapshot, do the analysis of what the data was at that point in time, and then reach conclusions based on that are applicable tomorrow or next week or next month. That doesn't work. You have to consider uh, the age of this information and whether or not that information has expired and needs to refresh. And if that's the case, then you need to recalculate everything based on that new information. So understanding the age of information, the useful time period for that information, and then what to do when that information needs to be refreshed. All of that is a tremendous technical challenge that we've spent a lot of time analyzing, and we think we have a good grip on, how to cycle through data to reach relevant, um, you know, time sensitive information and analysis for users. It's not just the
Ne-
it's not just the amount of data that's challenging. It's what you do with that data and how you age it out and replace it.
Got it. Many investors suffer from emotional decision making. How can data driven investing reduce costly mistakes?
Yeah. So I mean, the emotional side of investing comes with I'm hearing a lot about SpaceX or I'm hearing a lot about this other winner. I'm going to go chase that, right? And then the other emotional side of investing is, oh man, the market is like on a decline and things are going down and I'm going to sell before I lose all my money. And so those are the kind of emotional driven decisions that people make in investing. If you do data driven investing, you might see that the data has changed, but the overall conclusion, because the analysis is across multiple dimensions, not just the headline, not just the sentiment, not just this thing that they started working on today, but it's a multidimensional factoring of different elements that to make a recommendation or a determination that something may be worthwhile in investing. And so the data looks at all of those different things like macro regime, interest rates, look at profit margins and all those things. And it does an assessment based on all of those data elements on what action you should take based on, what might be happening at the time. So, and those two things will come up with two totally different course of action. And 100%, the data-driven course of action is going to be, a favorable outcome over an emotional driven decision.
Got it. And what common investing myths do you believe prevent people from building long-term wealth?
Yeah, I think probably the first thing is a lot of people think that the more data you have, the better your decision is going to be, and that's not true. It's what data do you have and how are you processing that data that makes a difference. Another thing is that people think that you have to trade constantly to make money, and that's not true. If you've made good decisions when you initially invest, more than likely the pace of your trading is going to slow down, and you're going to wait and see and watch your investments grow. So that's not true. So I would say those two things probably are the two biggest common myths. That you need a lot of data to make a good decision. That's not necessarily true. You just need to do the right things with the data you have. And the other thing is, you don't need to trade. You don't need to trade a lot to. In fact, the opposite is true. If you don't trade as much, more than likely your growth is going to increase much more over time.
So how do you balance AI-generated insights with human judgment? Is there any point where human experience still outperforms algorithms?
Well, actually, that is another common misconception, right? Is that AI is going to replace the financial analyst or the financial advisor, and I think that is absolutely not true. I don't think AI is replacing anyone that performs that role, and the reason why is because AI does not have fiduciary responsibility. They're not giving you advice based on fiduciary responsibility. Number two, they're not coaching you in times of decline. The AI is not going to say, hey, Rolando, don't worry about this. It's going to be okay. That news headline will go away and your investment will be just fine. AI isn't going to do that for me. A financial analyst will. If I call a financial analyst and say, hey, I'm worried, financial analyst is going to talk to me and say, hey, don't do that, and then they'll advise me why. So I think the financial analyst is absolutely necessary, and that the AI is just a tool that the analyst can use to make their time more efficient, spend their time working on things, other things that AI is already doing much better. AI is doing much better at collecting data, crunching it, coming up with a short list of where they should do their due diligence. But the due diligence part, I think, is a human. It's in this particular case, it's a financial analyst, and you should think of this platform and specifically in AI in general as a tool. So the thing I think about it like the hammer is not going to replace the carpenter, right? I might design a really
Yeah,
cool hammer that'll drive 5 or 6 nails at the same time, but you still need the hammer to, you still need the carpenter to swing that hammer. And I think
correct.
in this case is very similar situation. You need a person driving that conversation, interpreting the data, and talking to a client. And that person has to have responsibility, has to do it in a trained and legal and certified way. And I don't think AI is going to replace that.
Correct.
Yeah.
Correct. So, markets evolve constantly. How does your platform adapt when economic conditions change, such as inflation, interest rate, interest rate shifts, or geographical events,
Yeah. So, uh,
geopolitical events?
yeah, that's a really good question too, because and we've put a lot of time um, and processes into exactly that. So we do the calculation from the balance sheet, from the sentiment analysis, and we say this company looks great, but the macroeconomic conditions might not be great for that particular company. So we have to collect that data. We have to collect um, the yield. We have to create interest. We have to not create, but we have to consider that, right? The price of oil, all those things, because if you're an airline company or a travel company or any kind of transportation company, the situation in the Middle East right now is probably going to affect your outlook. If you're in the more so than other companies that do not have that dependency on oil. If you're, for example, in real estate, interest rates are going to affect you a lot more uh, than that will affect other companies. So you have to take these macroeconomic conditions and you have to look at the company and what line of business they're in, what sector, and how these macroeconomic conditions might impact that sector. And then you have to, calculate that into these are my top 20 or my top 10. Right? So you don't want a list of companies in your top 10 that are all dependent on oil prices when the macroeconomic conditions say oil prices are really bad and they're going to keep getting worse, right? So you have to factor those conditions to make accurate, I won't say predictions, but calculations on probability for growth.
From a software engineering perspective, what has been the biggest technical challenge in building a scalable fintech platform?
I'm going to go back to the data and the how the data evolves and how it ages uh, and what you do when you have new data. So one of the challenges that I didn't want to just have a snapshot of data that's applicable today, may be good for a week or a month or a quarter, but then after that the data has aged out and my conclusions from the analysis I made are not accurate anymore. I didn't want that to happen. So I wanted a continuously evolving and learning data set. So what I do now is I don't when I run a new data collection process, I don't get rid of the previous version. I keep it and I update what's new. I keep what hasn't changed. I update what's new, and then what that allows me to do is drift analysis. Now, not only can I see the current snapshot of a company and how they're doing, even with the macroeconomic conditions, I can see how they got there. I can see that over the past 4 months, they've been on an upward tick, in terms of growth. And then I can look at the same time, what are the variables that cause that uptick? What variables increase? What scores in the analysis we perform increase for that growth that match the actual growth? And so I can, start doing things like pattern matching. So I can like do a scan, for example, as I have more updates, it'll start to learn what were the macroeconomic conditions for these businesses to grow. What were the macroeconomic conditions for these companies to decline? And then I can add that into my processing for give me a probable top 10 list that'll take into consideration not only the current snapshot, but the evolution of how they arrived where they are. So that to me, working through that and actually uh, watching that work and evolve has been very exciting. It was very difficult and then very exciting when we solved it and saw that actually play out.
So, cybersecurity and trust are critical in fintech. How do you ensure your platform remains secure and reliable for users?
Yeah, so I mean, I take like a zero trust sort of outlook on the entire infrastructure, and I also reduce threat vector, right, or the threat radius. So the more you have to protect, the more data you have to protect, the more complex your security apparatus has to be. But what we do is we don't collect information about our subscribers. We don't collect financial instruments. We don't collect bank accounts. We don't collect personally identifying information like social security numbers and things like that. We just don't keep that data. We don't need it. We're a market analysis platform, so we don't depend on user data that needs to protect cybersecurity. So reducing that threat is one of the things that we can do. Don't collect more data than what you need to deliver the features that make this platform valuable. That's number one. And then number two, a layered approach at the architecture, and we make authentication and authorization to access those architectural elements are separated. So, network, compute, storage, all of those things have, sort of a different layer of authority and access control. You don't get like one, you don't crack one user ID and then access the whole infrastructure. That doesn't work.
Okay. If an investor logs into AMAAS Analytics for the very first time, what is the wow moment you hope they experience?
Yeah, what I'm hoping when I show somebody my platform, what I'm hoping to see the reaction is, wow, there is so much data that has been tied together and presented in a way that makes sense, that I understand why this company may or may not be a good investment. So it's just that getting balance sheet information, getting the macroeconomic context, getting the AI interpretation and explanation, getting the historical data on how that company arrived to the condition they're in today, that all of that data can be pulled from so many different sources and organized in such a way that I get it, I understand it. I don't have to spend all that time with all these different tools to grab that information and tie it all together and try to decide. This tool has done that all for me.
Okay. And looking back, what is one feature you initially thought would be a revolutionary, but ultimately didn't deliver the value you expected?
I'm sorry, Sai, can you ask that one more time, please?
Sure. Looking back, what is one feature you initially thought would be revolutionary, but ultimately didn't deliver the value you expected?
Yeah, there were. It was very enlightening going through this, because at first I thought that you could make good decisions. That you could predict the future. That's kind of what I was going for. I was going for doing analysis to predict what company was absolutely going to make it. And in my mind, I thought, like, I'm pulling the curtain for 3 months from now, right? I'm good, so that I can invest today, 3 months, 6 months, or a year, I can make some money. And that that's not how this works. What you want to do is do the analysis so that when 3 or 4 months comes, that you're prepared to make a good decision, right? That'll then pay out, 3, 6 months or a year from then. So the tools is something I can press a button and predict the future for what I need to invest in to make money 12 months from now. The tool is to do your homework and prepare yourself to make a good decision that will probably pay off, will increase your probability. So kind of expectation setting on what technology can do and how how to set your expectations. Really, that's one of the things that I adjusted the most as I was working through this. You don't predict the future. You increase you make decisions so you increase the probability that your decisions are good. And there's a difference.
Okay. What role do predictive analytics and machine learning play in future of investing over the next 5 to 10 years?
I think it's going to be that platforms that are able to not just display information, but um, you know, collect intelligence, right? So platforms that can take data and distill and process useful intelligence from that data. I think that's the where the platform or the technology is going years from now.
Got it. And many startups struggle to monetize AI products. What business lessons have you learned while building fintech trades?
That's one of the, I think, most impactful things that I learned. Um, how to monetize. Initially, I thought I had that sort of if you build it, they will come, kind of thing, and and that's not true. There's well, first of all, there's search engine optimization, but even if you do that right and you start getting people to your site, that's not a guarantee that your site is all of a sudden going to be a revenue generator. I think that you have to prove yourself to your audience. I think you have to earn trust, and I think the monetization has to follow that concept. So what we did is we have something we called in our monetization the ladder of trust, and we start out with free. I mean, take a look. You can go open the platform, and there are certain things you can do. You can open sample reports, and so that's free. And then and you can do that without registering. And then the second step is register, and you get a little bit more. You get actually 270 companies that are open to you for analysis. So you can start using single stock analysis. You can start using compare to different companies. You can start using build my own portfolio or build my own top 10. You can start using the tools with that small subset of companies, and that's free. And then the next step is if you've done that and you like it and you like the process, and that's what this is. It's like a process for investing, a disciplined process for investing. Then you can subscribe. And actually, even before that, you can buy Day Pass to get access to not just 270 companies. Now you have access to 4,300 companies. And you can do your comparative analysis and all, the relative scoring on that larger universe of stocks. So you can buy Day Pass, and then if you like the Day Pass and you want to keep it, you can buy an individual investor subscription, and it gives you access to a couple more features. And then if you really like that, you can buy the professional packages on the top of that ladder, and that gives you not only access to the entire universe, but access to a lot of features and functionality that the other layers below it don't have. So that's what we want to do. We didn't want to just, and I didn't know this. I didn't have that appreciation that people are not going to plop down money to work on your platform if they don't know who you are and they don't know what you're doing. I built it, now come on in, just didn't work. And so that ladder of trust, I'm getting a lot more traction now in that ladder of trust. Yeah.
So, uh, how do you earn the trust of investors who may be skeptical about AI-powered financial analysis?
I think the value, as soon as you log in, let's say you get, you buy a report. That's the other thing in the ladder of trust, is that you can purchase a report, and it doesn't require like a daytime access. You're like, oh, I like that historical process report that shows me how a company got to where it is now, or I like all of that data about who that company is and the macroeconomic context and all of the financial, strength of that company, all that data. I like that. So yeah, I mean, I think I think that that's how you earn that trust. You know, is that when you go in and you look and you see it's evident that there is a ton of information here that either I had to pull from a lot of different places or I just didn't even know existed. Then now I can use in my decision making. So I think it once you get in and you see what's there, I think the value is going to be very obvious. And you know, my challenge is to get more people to actually come in and take a look.
Okay. For entrepreneurs building SaaS or fintech companies today, what advice you give about product development, customer acquisition, and long-term growth?
I would say you know, start off with a clear problem statement and you know the problem that you want to solve, and then number two, you know, do your homework on what it would take to solve that problem, and then start developing your application, and then get feedback from users on what's good and what's not good about the application. You know, what features can go away, what features have a lot of value. So it's, you know, it's iterative all the way from ideation to execution to feedback loops. Uh, you know, and then observation and settling on, you know, what stays and what can go away. Always keep your finger on that pulse, starting with what is the problem you want to solve.
Okay. What exciting innovations or new capabilities can users expect from fintech trades and AMAAS analytics in the coming years?
Uh, I think over time that knowledge base, that continuously learning knowledge base, is going to grow, and I think eventually we'll have our own chatbot, um, that you can go and type, you know, clear language questions about the data in our platform and get very clear user articulated questions and responses to those questions. That's kind of where I want to go next. I started touching on that a little bit. I have like a pre-programmed questions, and then it goes in and does the interpretation and spits out the response. But I want to give users that access. Here's here's the prompt. Ask away, and have our system go in and respond to those answers. You know, that's probably the next thing that I'm anticipating with our platform. And over time, that knowledge base grows, gets smarter, picks up on patterns, produces better uh, observations and recommendations.
Oh. Finally, if someone watching this interview wants to become a smarter, more disciplined investor, what is the single most important habit they should develop starting today?
Man, I would say work ethic is huge. Work ethic is huge. Like work at it. You know, become a student of whatever it is you want to do. Get as much information as you possibly can about that line of business and how to succeed there. That's probably the first thing. And the second thing is you're going to have a lot of doubters. You're going to have a lot of haters, a lot of people that tell you that, you know, you're wasting your time. And you know, don't listen to those people. Don't. Just keep at it. Keep working. Of course, you have to take, you know, good advice and take that into consideration, and then maybe adjust your expectations and your goals based on things you didn't know before. So, you know, keeping an open mind is also very important. And then you have to, you know, you have to balance those two things: the haters from the good advice you get that might require some adjustment on your own expectations and objectives. Yeah.
Awesome. And if Warren Buffett and an AI model analyzed the same stock today, where do you think they would agree and where would they disagree?
You know, I actually went through that exercise. I use ChatGPT a lot for my research and development. And then I heard about another AI model called AI Invest. So I took the top five stocks that ranked the highest with my model, and I typed it into AI Invest, and I said, and it was like a kid starting a fight in the schoolyard. It's like, hey, this guy said this, right? What do you think? And they came back with a really thorough response about, I don't think that's a good mix of stocks, and it explained why. And so, true to that role that I was playing, the kid in the schoolyard starting a fight, I took that response back to ChatGPT. And I said, hey, Chat, this guy said, you're off. You're not right. And ChatGPT came back with its response. Oh, but kind of true, but that opinion was based um, on something that I didn't factor in my ranking. I took that response back to AI Invest, and AI Invest said, oh, I didn't know that. So based on that new knowledge, I think that list is a little, smarter than I initially thought. And then both models, what was really interesting about that is that both models reached the same conclusion about what I had to do next to make that list more accurate, and what particular financial metrics I should consider, and how I should consider that. And eventually, they both came to an agreement about what next steps to take. So I do that as a matter of practice from now on. I don't rely on just one model. I start the fight in the schoolyard, and then I come up with an even better answer. Yeah.
Got it. And do you believe AI will eventually outperform the world's best human fund managers? Why and or why not?
I don't. I don't. I think they do different things. But if you're asking, I'll tell you what. I'll be a little. I don't want to sound arrogant. I don't want to sound like I'm showing off or anything. But I started working this 2 years ago, and my very first index that I created uh, went to over 100% growth in less than 12 months. And so the thing I love about finance is like everybody is enamored with their model and their process for selecting stocks, but in the market, there's like one proof point, you know, that determines, you know, if you want to look at it that way, which model performed best, the growth rate. What did your model actually do? And that from a scorecard perspective, I think is very clear. And do I think that my models can outperform hedge funds? This is why I don't want to sound arrogant. I don't want to sound like I'm showing off. Yes, I think so. And I think right now the reason why is because I can work freely from ideation to execution. I don't have corporate friction. I don't have committees. I don't have all the things that they have that maybe result in a good outcome overall, but they have a lot more work to do to get to where they are than I do. I have freedom. I have and my results are as good as theirs or better. So, but I'll go back to the thing is that you can never, even though those models produce better results, and if you measure them that way, just clearly, which model produced the best outcome, I think I win there. But if you talk about how do you serve customers, they win, right? I cannot serve customers the way a hedge fund can. So that the hedge fund has that other component of I'm going to guide my customers through this investment experience that I don't have. So I can't beat them in standalone. But if I partner with a hedge fund, then I would make that comparison. Like I think a hedge fund that uses my tool is more than likely going to be much better than a hedge fund that doesn't.
So what's one investing belief you held 10 years ago that you completely changed your mind about?
Yeah, I think it was. I have to go back to the more data you have, the better your decision making. and the more often you trade, the more money you're going to make. I mean, those two things are just not true. I thought, when I started out that I was going to be prepared, to make a lot of trades, to make a lot of money, to look at my output and buy and sell, on a regular basis based on that output. And what I've been learning over the past 2 or 3 years that it's not how much data you have, it's what you do with that data. It's the more you invest in a period of, in my opinion, the more risk you are losing money. So I think if you make good decisions up front, you don't have to do a lot of trading after that. You just watch that good decision make money.
Understood. If you could eliminate one mistake that almost every retail investor makes, what would it be?
Don't panic. Don't panic. Um, Almost every investment I've made, very few of them have gone in a straight upward trajectory. Um, and what I would say to investors is like a lot of my investments have, started go up and then go down and go down to negative growth. And what I've learned over time is don't react. Don't react to that. Make sure that the fundamentals of your decision making are sound and trust that um, the analysis is going to be accurate and that trend is going to change and you're going to be okay. Don't panic. That would be the one thing I would advise.
One last question. What question do you wish every potential customer asked before choosing an investment research platform?
That's a really good question. Um, I mean, I would want to look at that. What information does that platform provide, and how is that information going to help me make an investment decision? That would be the two questions I would ask. You know, they're going to show me a lot of charts, or they're going to give me a lot of uh, independent pieces of information that then I have to go and figure out the meaning, or do I want something that goes to that next level, puts that information together, interprets it, and explains why that information is important? That's the question I would ask of the platform, and what I would be looking in a platform that I'm using for making investment decisions.
So, at last, what do you say about AMAAS and fintech trades to my audience and anyone who is listening from anywhere on this planet?
I would say go in and try it out. www. AMAAS is AMAAS analytics.com. Take a look, log in. There's a lot of information that you can access for free without having to commit. If you see at that first pass that, hey, this looks pretty good, go to that second rung in the ladder and register. Register, it doesn't cost anything. Register, it gives you another layer of access to information and processing, and then make a decision. I think what you're going to find is very useful, well thought out um, explanation of financial analysis, information, and data. I think you're going to like it, and I think if you use that information, I think the probability that you're going to make money from that data is very high.
Right. So, at last, as a business owner, as a person who is into American Army and deciding to do something different with the solutions that you have already have given uh, to in different places in different projects. What's your observation about my work?
Man, your work is, dude. Your work is outstanding. Um, you are a light in the darkness, man. And I can. The thing that I get from you is that uh, you listen, and you care. It's not really about you. It's about, I got this interesting guy. I think you might want to hear that story, and you do your homework. And so you're a facilitator, and you're very genuine. You're very genuine. Just the questions you ask are just, I just like it. I like the whole vibe of the thing you're doing, and the information that you bring out from your guest and the way you ask questions. Keep it up, dude. I mean, you have, I didn't hear of you before. I don't know why you're not on like a major network somewhere. Your work is outstanding.
So I have done masters in software engineering, also bachelor's in computer science and engineering. Right now, I'm working as a DevOps engineer for a London company remotely from India. So that's my full-time role. Apart from that, I'm interviewing experts like you who are into different industries, who are into different countries, who are coming from different backgrounds, who are coming with different experiences, who are solving different problems, coming up with different solutions to make humanity better, especially who are working on artificial intelligence. So I'm doing this from last 6 to 7 years. I have interviewed 200 to 300 chief
Uh-huh.
executive officers, and I have
Mhm.
interviewed vice president of Amazon Web Services and also vice president of Salesforce company. So the global leaders. So me having engineering background and having technology experience coming from
Yeah, yeah,
this kind of a technical background. So how this kind of an experience, me having conversations with experts like you who are, doing really great things and making humanity better. Having this conversation, how this is going to be useful for me in future, and also to my audience who are listening this podcast from all over the world.
yeah. I mean, it's just outstanding. It's outstanding, outstanding work. And I'm very, very happy that you invited me on your show. Just, actually, and even the questions you ask and then thinking about those answers, it really helps me too. It helps me think through some of the things that I want to accomplish, some of the challenges that I've had, and how I want to solve those challenges. It helps. You're also helping the person you interview. Just kind of think through what they're doing and how to do it better. So thank you for what you do. I really, really appreciate your work, and very grateful that you invited me to be on this show.
It's an honor for me, Rolando. Can you share your online presence to my podcast listeners for listening this so that they can see what exactly your solution is about?
Sure, sure. So the URL
Yeah.
is www.amaasanalytics.com. AMAAS is AM, like in market, AAS, like in as a service, and then analytics.com. Log in, take a look, and I think you'll like what you see.
Can I put this conversation on my podcast with your permission?
Absolutely. And if you don't mind, I would like to take a recording of that and post it on my website.
Definitely, sure. Thank you, Rolando, again for your valuable time and sharing about the solution that you came up with and to help investors and how you got this inspiration and idea, coming out from a profession. Now you decided to serve the humanity in a different way. Thank you very much again for your valuable time.
Thank you. Appreciate it. Have a great day.
Have a great day, sir. Thank you. Bye.